Welcome to HYCM Insight with myself, Giles Cochran, the Chief Currency Analyst here at HYCM. Now, the market move for the session headers as follows. The Nasdaq is approaching a very strong time of the year. Over the last, you can see 35 years, the Nasdaq has risen a total of 26 times between April the 14th and June the 5th. Now, the largest gain was in 2003 with a stunning 18.85% return. Biggest loss was minus 13.21% in 2010. Now, one major factor to consider is that the Nasdaq is largely driven by tech stocks. Apple, Microsoft, Amazon, Tesla and Facebook, they're the 5 largest members of the index. And so you can see that the index is heavily concentrated with tech companies, but it also does include companies from other sectors. It's often used for a barometer of the health of the technology sector. Now remember, over the COVID-19 induced lockdowns, the Nasdaq has seen very strong gains as the so-called stay-at-home stocks saw investor demand. Now as the world went digital, the Nasdaq gained. You can see the gains that came in last year over sort of 10%, around 15%. Now, trade risks. There is a growing risk that investors consider equity markets overbought. That could see a correction. It's hard to know when that correction will come, but investors need to be aware of the potential risk. Also, there's an upside risk that another breakout of COVID-19 could speed up further growth from tech stocks. So if there is another variant that's resistant to vaccines, we'd expect tech stocks to grow. And any delay in the US stimulus package, however, could result in general weakness in the US stock market. That would be seen in the Nasdaq as well, and the Nasdaq would likely suffer sharp losses in such an event.